Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is the 15th of July, or not July, 15th of November. Uh, the oil is trading down this morning in Asia. We're seeing Brent down over 1%, under $72 again. Generally speaking, in the week that's in it, or the week and a bit now, since the election of Donald Trump, we've seen oil prices drop $3 or $4, depending on where you want to take your mark from the time he was confirmed, or from the confirmed in the sense that he won the election, or the day of the election. But in either case, oil prices have been falling in the aftermath of the confirmation of his election victory. And we see all of the announcements, and we see all of his intentions. And generally, what we've been doing this week is trying to look at how the reactions to his intentions may play out as we hear his intentions. And one of them has the general narrative in the mix is that he will go back to his full enforcement of sanctions on Iran, and as was achieved in the last administration of the Trump administration, a pretty limited ability of Iran to export oil that was relieved during the Biden administration. But the expectation that will return. Let's kick off there this morning with Daniel Rahmat, Senior Energy Security Consultant based in Tehran. Daniel, your thoughts on the new Trump's administration's ability, if indeed they follow through with their expressed intention, to sort of contain and restrict Iran again, and ultimately restrict its oil exports.
Sean, I think we lost Dan there just now.
We lost Dan there just now at the critical moment. All was about to come in. Well, let's then skip across the street to Amina Bakr, Senior Research Analyst at Energy Intelligence, because, of course, OPEC Plus, who are meeting in a few weeks' time and reading the tea leaves on all of these things, and themselves are going to have to react to whether Iran can continue to export, whether the US under drill baby drill will be raising their capacity next year under the new Trump administration. Amina, how do you think OPEC Plus is digesting all of these tea leaves and planning for their big decision in a few weeks' time?
Good morning, Sean. I think the market so far isn't really factoring in the upside risk of Trump. They're looking at Trump coming in and perhaps putting an end to some of the conflicts here in the Middle East. And as you pointed out, I mean, it's clear from his intentions, the appointments that he made, that he's going to be quite hawkish on Iran again. Previously, I mean, he did manage to curtail Iran's export down to 200,000 barrels a day in 2020, I believe. So a repeat of that is possible. We're already seeing countries in the region. Qatar, recently, I saw the headlines, asked some of the Hamas figures to leave Doha on request of the US. We might see others in the region, maybe the US, Malaysia, the UAE, Malaysia, as well, try to curb any Iranian exports happening from ports there. So I think the market is kind of underestimating a further clampdown on Iranian exports. And in terms of the drill baby drill narrative, I know that, I mean, under Biden, he was quite anti upstream, anti supporting the sector, and very pro transition. But the truth is, shale production grew under the Biden administration. So what he says and what he does in reality are two different things. Sure, there might be more shale production, but I don't think it's going to be significantly more. So to OPEC, it's a really a matter of prices going back to reacting to fundamentals, because right now the prices are really acting on a lot of negative sentiment out there. There's a lot of fear of demand going down in 2025, and that's causing a downward pressure on prices. So that's why we've been seeing these very cautious move by OPEC Plus in delaying the increments. Could we see a possible delay further? I mean, in 2025? Yes, that's still in the cards. And there were even headlines this week saying that, you know, some analysts predict that oil might drop to $40. And personally, I don't think OPEC would allow that. They would keep the pressure on policy, keep a tight lid on compliance. So I see them constantly following that path of being super cautious into 2025.
Daniel, we lost you there just as I was sort of waddling on with my question. I don't know if you heard much of it, but basically I wanted to get your thoughts on how do you think Iran and Iran's ability to export oil will be impacted by what appears to be the Trump administration's intention to once again curtail Iran?
Hello, Sean. I'm sorry for the disconnection
No,
due to
pleasure.
internet problems here. Yes, of course, I totally agree with Amena that Trump will be at least significantly more hawkish than Biden against Iran, and he will try to press Iran and to implement more sanctions, more seriously implementing sanctions on Iran. The case is Iranian crude oil exports have three pillars. One of them is the markets in China, which we know that it is limited to China's Shandong province and mostly limited to Shandong province. The second is the fleet, shadow fleet, and how Iran transfers the oil to China, which is a very complicated network of VLCCs, Aframaxes, Suezmaxes, and other types of ships, which transfer Iran's oil through a very, let's say, long ship-to-ship chain to the Chinese refineries. And the third one is the financial system. I think the last one is the most vulnerable part of the Iranian oil export system, because the tankers are already, most of them are already sanctioned. And since the backbone of this whole transportation system is the Iranian National Tanker Company, so it would not be very much impacted by the US sanctions. It's very different with the Russian oil transfer or transportation to the Asian markets. So I think the financial system would be the major target of the US sanctions, in which the UAE plays a very vital role. If UAE accompanies with the Trump administration on implementing sanctions on Iranian financial system, which Iran has already figured out the importance or the threat, that's why Iran is importing 6 times more gold than last year, because Iran is understanding that if Trump wants to cut the financial flow through Iran, whether that's hard currency or the reserves being kept there for importations. So Iran is considering the threat very seriously, but I do not believe that without a Chinese green light, these sanctions would be workable or very significantly workable. Since 2020, in April and then July, which Iranian oil exports went down to 200,000 barrels, considering the coronavirus breakout was a significant element at the time. A lot of things have happened, including the Iran-Saudi rapprochement and the peace between the GCC and Yemen, and also an ongoing war in Israel and Lebanon and in the region. There are very significant elements, but I believe that Iran's actually attempt towards making a peace with the Americans, which yesterday happened was crystallized in a meeting between Elon Musk and Iran's ambassador to UN, we can understand that there are some signals that Iran is trying to make a different approach towards Trump. And I believe that this Trump administration is very different in terms of the regional policy policies, considering the war in Ukraine and also
Well,
the war in
we
the Middle East?
it's certainly a different time for different reasons. Let's bring in Arne Lohmann Rasmussen, Chief Analyst and Head of Research at Global Risk Management. Arne, just sort of pulling the lens back from some of these specific issues, geopolitics, of course, playing a part, Trump and so forth is the news of the day as he puts together his new administration. But meanwhile, the sort of pillar to this oil market ultimately on a demand side is China. And I'm wondering your thoughts now from China's outlook after 2 or 3 rounds of what appear to be a new stimulus policy. Is China going to have an impact? Is it going to move the needle a bit on correcting its current economic malaise?
Good morning, Sean. Good morning, everybody. We actually got some numbers out of China this morning. Retail sales was a bit on the strong side, but I still think the Chinese authorities haven't taken out the sort of big bazooka here. It's been very much focused on the housing market, construction, and so on. Not the big bazooka that could really support global private consumption, which is sort of the key ingredients here. And also sort of could support consumer confidence. This is all about confidence in Chinese households. We are lacking that piece in the puzzle. And then we shouldn't forget, from a oil demand perspective, there is a structural change going on in China that I guess we should be careful not to underestimate. There is a lot of EVs, there is a lot of LNG trucks, and so on. So I'm not so sure China will come back as a super consumer. But on the other hand side, I think we sometimes underestimate India in this puzzle. So next year, I still think that the non-OECD area will be supportive for oil prices, and I also think that China will start to pick up, but it will not be back to levels we saw 4 or 5 years.
I mean, we have seen that, particularly from countries that have an independent central bank and print their own currency, etc., like the US, like China, unlike Europe, where obviously it's a central European central bank. But as we saw in the US, they kept hammering at the stimulus over the course of the COVID and coming out of COVID until it finally moved the needle and really has set the US on a new trajectory that it's ultimately still on, and of course brought a lot of inflation with it. But what are your thoughts on China to keep hammering at this? It looks like for a long time, they hadn't committed to stimulus as a pathway out, but now they appear to have. And once they have, one would be confident, at least I would, that they will stick with that until it works. Your thoughts on whether we're still in the early days of this stimulus commitment by China?
This was basically what Japan tried for 20 years. And it took 20 years before they took out this big bazooka. I guess China is much closer to doing that, especially as it certainly seems that some tariffs are coming up in one way or other. They might not be 60%, but they will most likely be higher. So there is more stimuli coming from China. No little doubt about that, and they have room for it. There is no inflation. I think we should that is an important thing to remember. There is room for more stimuli because inflation is not an issue as we speak.
Amina, a big story out yesterday, well, big in the context of our little universe, and that was that the IEA put their monthly report out and forecasting a 1 million barrel a day surplus in 2025, which of course, unlike my introduction, which said it was mid-July, it's not, it's mid-November. So 2025 is only a few weeks away now. And so they're forecasting, even with OPEC cuts staying in place, there's going to be a surplus of 1 million barrels a day. Is there any consideration, you think, I mean, referring once again to that FT article from September that indicated that there may be appetite for a market share war within OPEC Plus? What is your reporting? What is your research telling you about OPEC Plus willingness to sort of take on this losing market share issue?
No, I don't think so, Sean. I mean, I think it's very, very unlikely that the group just floods the market again. We've already been through that scenario in 2020, and that created a really, really big surplus in the market that I don't think anyone wants to deal with at this point. And why would they do that anyway? When I mean, the OPEC plus policy is working. It's keeping stocks down. You have the group united around it. Compliance levels are good, so there is no reason for them to flood the market and have to deal with a lot of correction later on. So I find that scenario very, very unlikely. In fact, I mean, as I said, like they've been taking a very, very cautious approach to even bringing back some of this supply to the market. They're hoping things that will be corrected by the beginning of the year. But saying that, I mean, the expectation for 2025, including our own numbers, we do expect a smaller growth to happen in 2025. Our latest balances point to around 700,000 barrels a day of growth in 2025. And we do see a surplus happening if OPEC does roll back all of the 2.2 million barrel per day production that they plan to bring back to the market. So that's why I think they might need to pause.
Well, let me bring in another part of that equation, which of course is when OPEC laid out its plans, OPEC Plus laid out its plans earlier this year. There was layers of announcements. One was that, I don't know, I want to call them the regular cuts, were extended to the end of 2025, and then the 2.2 sort of special cuts by the 8 countries was going to start to be unraveled from October. Then they moved it to November or to December, and then they moved it to January. But there was a third announcement as well, and that was that the UAE was going to get its quotas increased from January the 1st. How do you see that proceeding, regardless of the other pieces or not, and the decision making around that?
Well, the decision around the UAE's correction was mainly around that the UAE is building its capacity, and by proportion, just by percentage terms, the UAE is sitting on more spare capacity in proportion to other countries, and that's why that there was this correction in the UAE's quota. I think this is what also is keeping the group quite united. I mean, we saw in the past that there were objections by the UAE over the fact that its quota wasn't fair to what its capacity base was. So this correction kind of gives it more.
What do you mean correction? They're changing quota. Is that
They're
what you mean?
changing quota. Yeah, they're changing quota, or it just keeps the group more united, and it's fair that way. So I see that going ahead.
Going ahead. Daniel, I wanted to get your thoughts on, we started the week out with one of our commentators indicating that they felt that there was still some geopolitical risk premium in the oil price, even in the low
We lost
seven.
your voice.
Sorry, we lost.
Uh-oh.
We
Sean?
lost. Hello. Daniel, can you hear me?
Hello?
Yeah, Daniel, I can hear you. I can
hear you. Yeah.
Okay.
Right,
Daniel,
right.
I was just saying that we started the week with one of our regular commentators saying, a trader that saying that they felt there was still a geopolitical risk premium in the oil price, even in the low 70s, because there was still some expectation that Iran may retaliate against Israel's recent strike, as they have said they would. I wanted to get your analysis on whether there's still something inside that is a shoe that could still drop. Your thoughts on that?
I cannot at the moment totally reject the possibility of a retaliation, a third retaliation, which Iran has promised to, has named it the third true promise. But that would be, as I said, I cannot reject the chance for something to happen, but that is very unlikely because then Iran is now trying to reduce the tension with Americans. So I do not believe that this would happen, but there is no guarantee. At the same time, there was some attacks on Iranian-backed militias in Syria, and apparently Iran is trying to use its proxies around the region in Syria and Iraq and Yemen to launch more attacks on Israel and increase the pressure on Israel. And Iran's first priority at the moment is to push Israel out of the Lebanese territories, and that would be considered a big victory for Hezbollah, and that would guarantee the existence of the group in the country. So, in terms of hello?
Yeah. Listening.
Yeah, in terms of the any kind of geopolitical premium for the oil markets, I believe that would be very unlikely, or if that happens, would be very short term, because Iran is not going to block the Strait of Hormuz. Although Iran itself has understood the risk of its oil facilities being targeted by Israelis, so it's diversing, it's exporting ports,
Right.
and has added the Josk port for the first time to its exporting actually ports, and that would be very significant step that Iran has launched for the first time its port in the eastern Hormuz Strait, just across the Fujairah. On the other side of the strait, there is a port called Josk. So I don't believe that would be a very serious matter, and Iran really needs the money, because there is no guarantee that the money flow towards Iran would be continued as the same in the same levels now. So
Right.
Iran is exporting as much as oil as it can, also refined products, and there is a longer story about the financial crisis here in Iran, also the energy crisis, ongoing energy crisis here.
Yeah. Aaron, I wanted to get your thoughts also on the sort of piece we were discussing with Amina there. We've had the OPEC monthly report, we've had the IEA and the EIA this week, all the last sort of the three main multilateral energy agencies ahead of the last round of those reports, ahead of the OPEC meeting, OPEC Plus meeting in Vienna in a few weeks' time. Your thoughts of what it stacks up to in terms of the decision that they're facing, and what the likely outcome do you think they're going to be considering?
I think they're going to postpone it once again, and maybe they're going to make a major revision to this plan, not just 1 month. I think it's quite obviously that we are in November, as you said, a few months left, and there could be this big difference between what OPEC says and the EIA and the US Department of Energy says. I think OPEC is probably still a bit too optimistic here, and I'm pretty sure that the OPEC knows that. So and I think they're also fighting a bit of financial sentiment here. Stronger dollar. The Trump trade is not really favoring sort of oil as an investment at the moment. If they add more oil in the beginning of December, I'm not sure they can hold this 70 level, and I'm pretty sure OPEC is fully aware of that. So I think they're going to postpone it once again, and they have to acknowledge somehow that this was a big mistake. This whole plan of adding more oil next year.
Would you expect them? I mean, again, coming back to the Trump policy announcements and intentions, that Trump obviously wants to see on his winning coalition a full energy potential, particularly of fossil fuels in America. I mean, whatever Biden did, obviously he supported all energy development and most notably renewables. But the Trump coalition seems to be heavily focused on developing and supporting fossil fuels, oil, gas, coal. Can OPEC Plus just stand on the sidelines and watch America ramp up production?
I think Amina also mentioned it, that maybe there's no other option than to accept that they will continue losing a bit of market share in 2025. But they are kicking the can down the road here. It's just my belief that it will be too early for them to take sort of the big fight against the non-OPEC producers and say, okay, we'll start the price war now. We'll switch to a volume strategy. I think after all, that would be better to wait maybe a year or a bit more. But this volume strategy is eventually coming. But I don't think they will do it already here in December. They still have some leeway. They can still kick down the can down the road and have a fair price and an attractive price for yet some quarters, maybe throughout 2025. Yes, they will probably be losing a bit of market share, but also remember, global oil demand will probably still be growing next year. The IEA actually pointed to better than expected demand from the OECD area yesterday. I'm not so negative on global growth next year. Interest rates are going down. Maybe they're going a bit less down in the US, but they're certainly going down here in Europe. They will stay low in Asia. Inflation is coming down most places. The tariffs will not kick in from day one, as I see it. Real income growth will be pretty good in most households across the globe next year. So the demand picture is not that weak. And I think maybe the International Energy Agency is a bit on the too negative side. Sometimes I feel that they are a bit political here. They were very keen to send a message last night or yesterday that there was this huge
Surplus.
of our surplus next year. I think they also alluded to that we now are pretty sure there'll be also a surplus this year. There's only 6 weeks left of the year or something like that. Or I think they sort of pinpointed a bit at OPEC here. I think they maybe have become too pessimistic on the outlook. I still think there's room for a price strategy from OPEC in 2025. This is more a question about 2026, 2027.
Let's go to the survey question quickly before we run out of time here. Fed Chair Powell said yesterday that economy is not sending any signals that we need to be in a hurry to lower rates. Is this bullish or bearish for oil prices? The Fed Chair Powell signaling that the Fed is not going to be moving aggressively forward with rate cuts. Obviously, they've done a 50 basis point and a quarter or 25 basis point in the last few months. They're not going to be speeding up. Is that bullish, bearish, or no impact for oil prices? The fact that they're not proceeding with deep cuts for the reasons, as he said, is that the US economy is doing great. And that's typically bullish for oil. But bearish tends to be, well, if you ease off, then it gives the economy more chance to grow, and that's more. So where do you put your bets on this? Bullish, bearish, or no impact? Amina, looking forward again to the decisions that OPEC are making, the last time we had oil prices sort of coming down and knocking on the door of 70, OPEC Plus moved and announced their decision to postpone raising of the delay or the postponement of raising supply. Do you expect that they could still move ahead of their meeting, given the prices are in a somewhat softening trend, or will they hold and wait until they meet?
Well, the next meeting is due to happen on the 1st of December. Theoretically, it's supposed to be in person. I think it's going to be another online meeting. And that meeting is really to discuss 2025 policy. We're at the end of the year. I don't think there are going to be any changes. Is there a possibility they further hold off bringing supply to the market, given where prices are in? Yes, yeah, there is a possibility of that. So all kind of options are on the table. And I think, I mean, they're going to continue being very careful where they tread, especially if there's uncertainty on over how the market reacts. And you just mentioned one of the factors, I mean, the Fed playing a part in this, but whatever we know in theory works. For example, if I tell you there's increased geopolitical risk, you would say, okay, that means increased price. But in this market, the price drops on geopolitical risk. So we're in a kind of funny part of the market. It's a very, very tricky time for the group to be managing markets. So I think there is a possibility that they set, again, a very, very cautious approach to 2025 policy when they meet on the 1st of December.
Daniel, just to wrap up on the outlook for Iranian exports, I wanted to get your thoughts on how vulnerable or supportive do you think the Chinese buyers will be under a more kind of restrictive US policy. Will the Chinese stick with the Iranian buying, or will they be vulnerable to back away? I mean, how resilient do you think their commitment is, or not?
Sean, there Chinese teapots buying Iranian oil, not the major ones, nor the government-owned ones. So there's very small refiners, are 24 plus refineries buying Iranian oil in China. And most of them, as I said, are located in Shandong province, which is a very complicated network of refineries, infrastructure, and ports which are involved in buying Iranian oil. Also, remarkable part of Iranian oil money is being kept in China as the Iranian foreign currency reserve, which makes the Chinese government satisfied. And in addition to that, Iran receives this money in yuan, which is not very costly for the Chinese government to pay for, or the Chinese refineries to pay for. So as you see, everything is very juicy for the Chinese refineries and also for the Chinese government. I believe they are going to be committed to the buying Iranian oil unless they are very seriously threatened by the US government. And I think the discounts Iran is paying for is a very great incentive, which can make the Chinese buyers actually being very innovative for creating new methods or new ways to bypass the sanctions. I think the Chinese refiners themselves are not that vulnerable against the sanctions as the infrastructure is, because the infrastructure in Shandong is limited to ports and pipelines, but the refineries are very complicated. I think in terms of the way Iran transfers its oil to China, the more, let's say, more complicated and longer ship-to-ship chain would help Iran to bypass the sanctions, but the infrastructure in Shandong is really vulnerable, and maybe the refiners are not in that level.
Right. Okay, well, we're going to have to leave it there. Some of these lingering questions that we're going to be seeing unfold over the coming weeks and months as the US government changes, starts to bring in new policies. OPEC has to make some decisions with their meeting soon. So some questions will start to get some answers. But meanwhile, oil, Brent, stuck in the low 70s. Chair Powell's comments yesterday seem to be bearish, according to this room. We'll post that on Twitter and elsewhere for further voting. Brent crude oil in Asian trade today down 1%, looking like it's closing the week out, going to be down a few percentage points, but holding above that $70 level that we saw, only broken once this year on September 10th. And will that hold through the rest of the year? Will there be enough signals to keep this market supported with Brent above $70 a barrel? We will have to wait and see. Thank you so much. As always, great to have Amina Bakr on the show. No better voice on all things OPEC and Middle East oil supply. Daniel Rahmat, the best in the business on Iranian strategies and interactions with the world. And of course, Arne Lohman Rasmussen gives us that great global perspective. Thank you, Arne. Thank you, Daniel. Thank you, Amina. Have a great weekend, everybody. All the best.
Yeah.